Rates have topped 7%, more than double what they were just 2 years ago. Of course, we know it's a tough market for buyers here in the DMV, but our very own Katie Barlow has the scoop on a way you might be able to save some money and get a better rate on your new home. Katie, tell us all the tips.
Well, it's called an assumable mortgage, and it allows the buyer to assume the seller's mortgage along with that interest rate and the repayment terms. Could be a golden opportunity for some buyers, but as with all things, terms and conditions apply. Assumable mortgages generally only work for government-backed loans like an FHA or VA loan for veterans. The original loan doesn't cover any appreciation in the home, so the buyer's on the hook for any uptick in value. Buyers also have to meet the terms of the original loan and qualify with that lender. That can take time, a luxury that buyers in the DMV don't usually have.
The biggest difficulty is getting a seller to agree to assume or allow you to assume their loan. Because once again, the reality is you're lucky to have an assumption be approved within 90 days.
In the DMV market of competing all-cash offers and shorter than 30-day windows to close, slow timing can be a tremendous barrier. There's also some risk to the seller if the seller is a veteran with a VA loan.
While a non-veteran can assume that VA loan, if it is a non-veteran, the veteran then loses that portion of their VA eligibility as long as that mortgage is out there.
How do you find an assumable mortgage? Andrews and Yee estimate only about 5% or fewer homes have the option in our area. And with appreciation rates continuing to climb across the region, the cost of a second loan to make up the difference may not be worth it.
They were trying to buy a $600,000 property in Virginia, in Falls Church. And the veteran who's willing to offer the assumption, because a veteran to another veteran, he had a 2.5% loan. So everything's great, everything's falling into place, but the reality is he had to come up with a $225,000 second loan to make up the difference. And when we did the aggregate payment, we did the comparison. Payment is about the same.
He says you should be able to search public records to see if a deeded loan is a government-backed loan and assumable. A needle in a haystack, to be sure, but one that could pay off.
An assumable mortgage can be a fantastic opportunity for the right situation, but you just have to find that right situation.
Some good news, perhaps. Yee predicts that mortgage rates will actually go down by the end of the year. Back to you.